Hello dear viewers, hope you all are doing well. Welcome to revision time. In our previous video, we have studied about petty cash book. Petty cash book is a book in which we maintain small expenses. Petty means small. So petty cash book is a book to maintain all our small expenses like telephone, telegram expenses, postage and stationery expenses, convenience expenses, refreshment expenses, bus fare, wages and salaries, miscellaneous expenses, all expenses which are of small amounts and which are of recurring in nature, repetitive in nature, are maintained in our petty cash book. And this petty cash book is maintained in impressed system of accounting, that is by impressed account, where a fixed amount is given to a cashier and he is expected to expend all these expenses in that amount itself, and the balance is carried out for the next month. So today in this video we will be studying more about subsidiary books. So let's start with that. So transactions, there are two types of transactions. As we all know, there are two types of transaction. One is cash and the other one is credit transaction. So basically cash transaction will normally be posted into cash books, obviously, but credit transaction, purchase credit or credit sales, all such transactions are recorded in purchase book. Credit purchase in purchase book and credit sales in sales book. Credit purchase in purchase book and credit sales in sales book. Today we will be studying entirely about purchase book. So there are few of the rules relating to our purchase book, like what entries are to be recorded and what entries cannot be recorded. First of all, credit entries. Credit purchases. Only credit purchases are to be recorded in our purchase book. What kind of credit purchases? Purchases which are related to business, purchases which are related to the main activity of the business are to be recorded in our purchase book. For example, say that you are into the business of electronics. Okay, for this electronic purpose to sell, you had purchased a stock of speakers, or you can say light bulbs. Such types of such type of purchase are our business purchase, for our main activity purchase. Instead, you purchased furniture or you purchased a table or computer for your business purpose. All such which are an assets of the business, which are not into the main business activity, are not recorded. Even if they are credit purchase, are not recorded in our purchase book. Purchase books records only those purchases, credit purchases, which are related to business, which are related to main activity of the business. Next, third, that trade discount, if trade discount is allowed by the seller, it has to be deducted. You have to minus it. And after deducting the trade discount, if GST is applicable, GST is to be added. GST is to be added. So these three important points, only credit purchases are to be posted in our purchase book, and only business related, the stock which is purchased by the business to make the sales, are to be recorded in our purchase book, and trade discount is to be deducted and GST is to be added. We have to first deduct the trade discount and next add the GST. Let us read out the meaning and understand more about it. Also, we will look into the format of purchase book. Let us read out about the subsidiary books here. Subsidiary books are the books that maintain track of all the transactions that are similar in nature in an orderly way. They are also known as special journals or day books. So these subsidiary books are known as day books too. So there are 8 types of subsidiary books: cash book, purchase book, sales book, purchase written book, sales written book, bills receivable book, bills payable book, and journal proper. In this lesson, we will be only studying about cash book. We have completely covered all the videos on this cash book. We have studied about single column cash book, double column cash book, and petty cash book. Attaching the link over here, please go through it. In this video, we will be studying about purchase book. In our further videos, we will be looking into sales book, purchase written book, sales written book, and journal proper according to this chapter. So what is this purchase book? Purchase book is a subsidiary book that is used to record all transactions related to credit purchases. Very important, related to credit purchase only, because normally cash purchase is recorded in our cash book. The purchase of assets are never recorded in the purchase book. Assets we are not recording. We are recording the daily stock, the main activity, the stock of main business of the firm, which are purchased on credit. All such are recorded in our purchase book. Entries are made with the net amount of the invoice. Invoice is the proof of entries for recording them in our purchase book. Here is the format of the purchase book. Heading, purchase book, date, invoice number for the reference, name of the supplier or account to be credited, ledger folio, and amount of the credit purchase is to be recorded. Let's go through a simple example and understand it in more better ways. Let's read out the transactions and then post the appropriate transactions in our purchase book. Consider the following details obtained from Ms. Kanika Traders and observe how the entries are recorded in the purchase journal. So on August 4th, purchased from Nima Electronics, invoice number is given 20 mini size TV at 2000 per piece and 15 tape recorders at 12,500 per piece, and they also gave a trade discount on all the items 20%. August 10, bought from Pawan Electronics, invoice number 8260, 10 video cassettes at 150 per piece, 20 tape recorders at 1650 per piece, trade discount 10% on purchases. Purchased from Northern Electronics, invoice number 4256, 15 Northern stereos at 4000 per piece, 20 Northern color TV at 14,500 per piece, trade discount at 12.5%. Purchased from Nima Electronics 3290, 10 mini size TV at 1000 per piece, color TV at 12,500 per piece, trade discount 20%. Bought from Pawan Electronics, invoice number 8281, 20 video cassettes at 150 per piece, 25 tape recorders at 1600 per piece, trade discount at 10% on purchases. So let us record these transactions now. First, so here our format of purchase book is ready. Name of the name of the business, that is books of Kanika Traders, purchase book, date, invoice number, name of supplier, amount, and amount column. Inner amount column is nothing but just for calculation for our understanding purpose. So on 4th August, invoice number is 3250. From whom it is purchased? By Nima Electronics. What all is purchased? Mini size TV. First is mini size TV. How many? 20 are purchased for 2000 per piece. So here 20 into 2000 rupees, 40,000. Next, tape recorders, 15 tape recorders for 12,500 per piece. 1,87,500, and here trade discount on all items together they have given 20%. So trade discount, so let us first total the purchases, that is 2,27,500. This is our total purchases. From this, trade discount is to be deducted at 20%. So 227500 at 20%. 45,500 is the discount given. So the total from Nima will be total purchases minus trade discount. Here it will be 1,82,000 of credit purchase from our Nima Electronics. So I hope it's clear to you. We have just written the name of the supplier and we took the items which are to be taken into consideration. They bought the mini size TV 20 pieces for 2000 rupees. 40,000 is the total of mini size TVs. Next, tape recorders, they bought 15 for 12,500 and total of tape recorders is 18 1 lakh 87. So our total purchases will be 2 lakh 27,500, from which trade discount is given of 20%. So when we did for 2 lakh 27,000, when we take off 20%, 45,000 trade discount is given. So our credit purchase from Nima Electronics is 1 lakh 82,500. Next entry on 10th August, similarly for invoice number 8260. Here we are purchasing from Pawan Electronics. Here video cassettes. How many? 10 video cassettes at 150 per piece. So is equal to 10 into 150. 1,500. Next we are purchasing tape recorders. How many? 20 tape recorders at 1,650 per piece. Sorry, 1,650 per piece. So here the total will be 20 into 1,650. Total is 33,000 and trade discount at 10% on purchases. So total purchases, our total purchase is 34,500. From this, they are allowing us trade discount of 10%. So on total purchases, they are allowing 10% discount, 34,500 into 10%. 3450 ka discount they are allowing us. So from total purchase, if we deduct 3450, our total credit purchase will be 31,050 from Pawan Electronics. Transaction is on 18th August. Invoice number 4256 from Northern Electronics. Here we are purchasing 15 Northern stereos, 15 at the price of 4,000 per piece. So here it will be 15 into 4,000 rupees. 60,000 rupees is the total of Northern stereos and 20 Northern color TV. Northern color TV. How many pieces? 20 pieces for 14,500 each piece. So is equal to 20 into 14,500, 2,90,000. They are again giving a trade discount of 12.5%. Let us find out the total purchases here first. So our total purchases will be 3,50,000. For this, they are giving us trade discount of 12.5%. So on our total discounts, on our total purchase of 3,50,000 into 12.5% discount, so 43,750 rupees discount they are allowing. So our total credit purchase will be 35 lakh minus 43,750. 3,06,250 is our credit purchases from Northern Electronics. So next entry is on 26th August. Invoice number here is 3294. We are purchasing here again from Nima electronics. What we are purchasing here, again 10 mini size TV, but here we are purchasing 10 for 1000 each. So our total here will be 10,000 rupees, and we are purchasing 5 color TV. Sorry, 5 color TV for 12,500 each piece. So is equal to 5 into 12,500, 62,500 is our total purchases of color TV. Here let us calculate total purchases. That will be 72,500. And here they are again allowing us trade discount of 20%. So 72,500, 20% discount is 14,500. So our total credit purchases will be 72,500 minus 58,000 rupees. Our next entry is on 29th August. We are purchasing it on invoice number 8281 from again Pawan Electronics. Here we are purchasing video cassettes of 20, but here 20 video cassettes for rupees 150 per piece again. So is equal to 20 into 150, 3,000 rupees. And we are purchasing tape recorders, 25 pieces for 1,600 per piece. Your total is 40,000. So our total purchases will be 43,000. From this 43,000, they are allowing us trade discount of 10%. So trade discount of 10% would be 4,300. 43,000 into 10%, 4,300, and total credit purchases will be 43,000 minus 4,300. That is 38,700 for 29th August. Now our total credit purchase, we have recorded all the transactions. Now our total of credit purchases will be total of our outer column 6,16,000. This is total of our credit purchases. This is how we have to record only those transactions which are credit purchases and which are relating to business. Here the business was about electronics and we recorded all our electronic related credit purchases. We have to deduct the trade discount from the total purchases and then take the amount into consideration. So this is a small problem on our recording of transactions in purchase journal. In our next video, we will be looking into more such transactions. We will be taking into consideration GST also. So stay tuned for the next video. Until then, subscribe to our channel, like our video, share our videos with your friends. Until then, happy learning, signing off.